In our previous video, we discussed about how to set up items in Quickbooks and how to apply the tax code on them so that Quickbooks automatically acknowledge, apply the tax rate to our transactions, to our invoices and our receipts. So we have already done that. So in this video now, we are going to record a couple of transactions so that we can be able to see what it means to apply VAT or tax rate, that's the sales tax or VAT rate on them automatically. So that's what we're going to do. That after we have done that, we also adjust our inventory. Alright guys, welcome back to my YouTube channel. Please, if you just stumble on this channel, do well by subscribing to this channel so that you will not miss out of the content we're going to be dishing out in this channel. Alright, in our previous video we have seen how to record transactions, how to apply the sales tax to our items so that it will be applied automatically whenever we raise an invoice. So what I'm going to do now is to show you how it applies automatically to our items when we select the items that are vatable or that has sales tax rate on them, or items that are vatable. So what we're going to do now is, let's say the first transaction was a cash transaction. The customer, what it means by cash transaction, the customer paid immediately. So you can just create sales receipt. Please, if you don't know what we are doing here, there's already a video I made on that, on how to record customer sales, how to record sales transactions from customers. Please do well by watching that video. I'll also leave the link in the video description, so make sure you watch that video so that you will learn how to do this. So let's assume we don't have any customer yet. Let's say we don't have any customer. Let's say the customer is IJ Chom. The trauma, that's the name of our customer, blah 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 blah. Fill all this other information. When you are done, you click OK. So after we have done that, what is the method of payment? How did the customer pay? Did the customer pay us in cash, that's by cash, or the customer write a check, or the customer did transfer? If the payment method is not here, what you're going to do is to just click add more, add this, now say transfer, TRF, just simple as that. Transfer, select, then select it, it will automatically come here. Then what item did the person buy? The item, let's say the person purchased super pack. How many cartons or how many quantities? Let's say the person purchased 20, no, let's say 10, and the person. So once you select that item, automatically look at what happened. You select this super pack, the rate comes up immediately. When you put the quantity, it calculates the amount the person is going to pay. 10 times 200 is 2000. Now you can see that it applies the VAT rate automatically, showing that yes, this item is a vatable item as we have already set it. Now if you come down again, you look at this value, you look at the value here, you can see that the tax is value added tax. You can see value added tax, and the tax rate is 7.5%. Then it applies 7.5% on the 2000 naira. That's why you're seeing 150, and the 150 is added to the customer's receipt. So sometimes what we do is because what it means is that this 2000 naira is VAT exclusive. So in setting up our inventory part item, setting up our inventory, what we usually do is to incorporate the VAT into the amount so that the customer may see the VAT. Because some customer, when you tell them that okay, this item costs 2000 naira if you need this total quantity, but you may not have the time to explain to the customer that okay, this item you are buying, the quantity you are buying as 10, and the amount of 2000 naira does not include VAT. You may not have the time to explain all those things. So what you're going to do is calculate the 7.5% out, then put the net amount, so that when you now put the VAT, you now include the VAT, you now net it up to, it now gross it up to the 2,000 naira, which is the amount you are selling to them, because some customer is not accepting because they will say, you didn't inform us that this is so, this is so. So you just have to do it like that. Now you have seen that it has captured our VAT rate automatically. What you're going to do is to click either save and close or save and new. If you say save and close, it will save and close the whole of this window, and if you say save and new, it will save this particular transaction and open up another one for you to enter. So always make sure you check the dates. Very important. The date of the transaction is very important. The sales number, you can choose to customize this. Let's say I'm trying to customize QBS 001. That is it. That is because I use our company initial. Okay, QPC as our company, the company initial to be part of our sales number. So that is it. Once you select that, you now click on save and new if you want to open a new or start a new transaction, or save and close. So for this, let's say save and close. I've already saved it. Now, like I said in the other video, if you have not watched it, go and see. Any transaction you made, automatically if the transaction amount will be deposited in your undeposited account in QuickBooks. So what it means that QuickBooks recognize, don't know whether this amount has been deposited into the bank. Remember that this is a cash transaction, so you have to tell people, yes, this amount has been deposited to the bank. Later, if you have not watched my videos on how to set up bank account in QuickBooks, please watch the video. I'll also leave the link down in the description so that you can watch and learn as well. So this is a cash sales transaction that we have recorded. Now I want to record a credit sales transaction. Now credit sales transaction, what it means that we are raising an invoice. By raising an invoice automatically means that that transaction is credit. The customer may pay us in full or may not. In fact, if you are using an invoice, there's nothing like payment in full. It's either the customer paid half or did not pay at all. So what you're going to do is click on create an invoice. Let's say we are creating an invoice for the same customer. Click on the name of the customer, and the customer this time around, let's say we are rendering service to the customer. Let's say the customer's destination is 100 miles from our place, and 100 miles from our place, from our office, is 150. Let's say yes, 150 for this transaction. Let's say is 151, and yes, for this transaction is 150. Then let's put another transaction. Let's say this time around it's not service. Let's say the customer purchased malt, and how many quantity the customer purchased? The customer purchased let's say purchased 10. Yeah, now you can see it has add up everything, and the value of everything amounts to 27,036.25 kobo, including the VAT. Of course, you will see it here. So once you're done with this, you click on save and close. Once you save and close, this one is just a correction for this. If you want, you can just say add, otherwise say ignore all. Click OK. It will save and close. Now look at this place. Why are we having one instead of two? Because we already recorded the second transaction. Why we are having one here is because this is the only one that has been paid for. This is the only transaction that has been paid for. The first transaction was paid in cash, then the other one is an invoice that we raised. That means the customer did not pay at all. Okay, let's say the customer now pay you. Now if the customer pay you, you don't use create sales receipt to record that, because this one is for immediate sales made by cash. Now this one now is the one you're going, this receipt payment is the one you're going to use to record transactions made on credits to customers. So click on it to receive the amount, or to record the amount the customer paid. So select the name of the customer. Once you do that, I'm fast here because I know I've already made videos on how to record that already. So go back to my videos and watch that. So if the customer paid you full, you click here, you check it. It will not tell you that blah blah blah. You read all this English. Yes, you are aware. Now, but the customer did not pay us in full. Let's say the customer just paid 17,000. This is what the customer paid, and he paid it via transfer again. So he paid through transfer. Now, when you're about to record this transaction, Quickbooks is going to pop up an information asking you whether this payment should be left as an underpayment or uh, write it off. Now, if you check here, you can see leave this payment as an underpayment, or you can say write it off. When you say write it off, that means it will discount it for the person. You say, okay, you give the person discount of the remaining balance, or maybe it has become a bad debt, so you want to write it off from your books of account. So that is what Quickbooks is going to do here. But in this case, we are going to leave it as underpayment. Then click save and close. Make sure the dates of payments is active. The reference, our reference is on the, let's say, QPC, right? 001. That was our reference. So click on it and say save and close. Once you click save and close, it has been recorded, and automatically the record deposit increased by 2. You can double click it. Yes, we have not set up any bank account yet. That is why it's showing us. Alright guys, I'm not going to do that in this video because it's already getting long. I'll do that, or you can watch my previous video regarding this setup, because I know I have done videos on them. I'll also leave the link to those videos in the description below. So thank you for sticking around. Make sure you like and subscribe to this channel. See you in the next video. Thank you for watching.